What's up, guys? This is Rustic. Welcome back to another episode of Rawstocks. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get going, don't forget to check out the links in the description below. There's a links to the Rawstocks Discord. There's a links to the wap.com to upgrade to premium, where you get access to the call-outs, you get access to the live book study, and you get access to private premium chat. There's also a link to Top Step, where you can take a crack at becoming a futures funded trader by passing a trading combine. Right now, the 50K combines are only $49, so check out that link if you dare. So let's dive into the charts. Today, again, we got Tesla. We got Tesla's daily chart open first. A couple things to notice, right, is that we have taken out and closed this daily fair value gap. Now, technically it closed. We can change it to orange. We can call it a daily inverted fair value gap because we've now inverted it. If we drop back down below it and we pop back up into it, it is likely to act as resistance as a potential area where we draw on the liquidity inside of that inverted fair value gap, also inside of this breakdown candle on the daily chart. Okay, we're only one day into the week, so nothing says that if we gave it all back in one day that we couldn't take it all back in another day. But is that likely? Time will tell this week. But it's important to note that we did invert that fair value gap. Okay, we were looking for a push to fill the gap all the way up to 206.87 and above. We also were looking for extension all the way up to the one standard deviation of 218.19. It's not entirely off the table, but something that has developed is we saw that trend break, right, on the daily chart, and we'll look at it also on the lower time frame charts. So we saw that trend break. We were developing that trend, right, and it is in a bull or a bear flag pattern, I'm sorry. And, you know, we saw that resistance tested a few different times up top. We saw 200 level get pushed and not hold on a couple different occasions. And then now we see just a massive sell down into Monday. So where does that leave us likely to head if we're just looking at the daily chart? Well, we've cleared out the sell side liquidity down here in this candle from the low of February 20th. We've also cleared out the sell side liquidity in all the wicks of that same week. Okay, we've closed out some smaller time frame fair value gaps that were also in that area. And then as we drop into the 4-hour chart, you'll see where the 4-hour fair value gap that has already been inverted is going to sit. And you can see where we might hold support if we do drop down a little further. Now, again, we also have our fib levels that we've drawn out, and we're potentially running a test on the fib levels. So if we do want to drop a little bit further, we might see 185.74. We could see 183.19 being the 61.8 fib. We could see us come back all the way into optimal trade entry, 181.30. Okay, and so those are potential targets if we were to continue to head down into this week and then find support. We could find them in those levels. From there, if we give up those levels, we are looking at the breakout candle low of 177.23. Then we're ultimately looking at the 174.92, which is the previous low. And beyond that, we'd have to look further back in time, and we'd look at some of our targets that were back from May 2023, April 2023, as additional sell side liquidity if we need to free up some more before making a move to the upside. So let's jump into the 4-hour chart. And on the 4-hour chart, we got our premium and we got our discount zone. We also have our equilibrium, which we did not get back up to, but would have been in the 217 to 219 range. You can see we made that push up. And on the 4-hour chart, we have a fair value gap that was right here. And you can see we basically fully drew into it. We did not get all the way up to the top. We did not invert it, but we drew into it. We saw our sell down, right? We also saw this 4-hour fair value gap right here get inverted. Also not a great sign, right? As we also saw that trend break. So if we were to pop back up, we might see us pop back up again into this 192, 193, all the way up to 199, right? And see if this inverted fair value gap holds as resistance. And if we pop back up, it would look something like this, right? Come back up into the inverted fair value gap where there's also a 4-hour bearish fair value gap, right? Draw on the liquidity there, potentially target the lows from February 13th, which are down around the low 180s, right? From there, we could find support. From there, we could dump even lower. We got a big order block down here at 158 and even lower. So we could just see like a full kind of capitulation style move where we just dump down to take a new low. And it's not off the table. So we'll just be watching to see, what develops. Right now, you could be looking for opportunities to take short-term short entries on moves back up using smart money concepts. Right, look for those 1 minute, 5 minute, 3 minute, 1 minute, bearish fair value gaps and a return to. Take your short entry on the short time frame, right, and see if we can ride a little bit more momentum to the downside. Now on the 4-hour chart, we do have, an oversold reading as well on the RSI. So we are looking for a bottom to carve out, but that doesn't mean that we can't go deeper. On the 1-hour chart, this gives you a much better look. Again, on the 1-hour chart, we get another fair value gap inversion. So we've got a number of fair value gap inversions on all the time frames. Right? We also are trading down into a 1-hour order block, and that goes all the way down to 183.41, give or take. And so we definitely could see as we set lower highs or equal highs here, we could see if this order block holds a support. We could drop down all the way into it. We could find the support inside that order block. It was a previous area support, but here you can also see that trend line clearly broken on the 1-hour time frame. From there, we just faded out. Right, ran out the liquidity in these lows, dropped down into the order block. This is going to be kind of the last line of defense for the bulls, if you will. So we're going to be watching this liquidity level at 182. We're going to be watching the order block that goes down to 183.34. Beyond that, the only next thing is a fair value gap down here from February 6th that we could find support, and another order block down in the 176 area. Okay, so if we were to fade even further, we would be looking for the potential for the order block, the fair value gap, and even the deeper order block to get traded into. Now, if we were to pop back up, similar to the other time frame we were looking at, right, we could pop back up all the way to 193 up to 196, right, and we could find rejection in that inverted fair value gap, come back down, take the rest of the order block or sell side liquidity or even deeper, right? And then we could potentially start to see a move back in the other direction. This week is heavy with Fed speakers, heavy with data. We got non-farm payroll. So there's definitely a lot on the table that can move the market in either direction. So it's going to be interesting to see how exactly that's going to look. But definitely this does not have a good look. It does not have a clear bullish look. It definitely looks, like the trend broke, right? And that's bearish. But we're down in this order block. So really the bulls want this order block to hold. Bears are going to want to continue to take this down and then drop down even further to take the new low. I don't know if we quite have the energy to do that, but this would be the week that the market will move if they want to drop it down lower, right? But also there's not much structure here, so it is relatively easy to overtake these kind of moves. As you saw over here back February 15th, we saw that rip up was easy to take back down, right? Now also on, February 26th, we see a rip up, some consolidation. Now we saw that was very easy to overtake this on the 1-hour time frame. There's just no structure there, right? And so oftentimes, similar to this move over here as well, January 24th, this was back on earnings, right? We overtook part of it. We overtook quite a bit of it there. So, there's not a lot of resistance inside of these areas in order for us to not trade up through them. So similarly to today, there's no structure on the 1-hour time frame. We basically just straight dropped, saw a little bounce, dropped a little bit further. So it's not going to be difficult if we want to move back up to overtake that area. We could invert the inversion. Could see that happen. So we're really going to be paying a lot of attention to this low here inside this order block, 183.35, right? We're already inside the high of the order block. And we could look at the consequent encroachment or the 50% level or right around 185, say, somewhere in there, half or all the way through, we might find that support to see a bounce, right? And that bounce may not take us all the way back up into the 200s, but it might certainly give us a little bit of oomph back towards the upside, where some of you guys, including myself, still holding some longs that still have some time for expiration, especially the ones in April, but they're pretty deep red. So we'll be looking for exit strategies if we start moving back up into that mid to high 190s. Last, we'll look at the 1 minute time frame on today's chart, and we can see that there wasn't a whole lot of indication right out of the gate that there were any great entry points as far as trying to take your short entry. I mean, at least using smart money concepts. If you were just straight up looking at this chart, right, on a 1 minute chart, we get our 930 candle, right? We saw a little pop up, we saw it drop, right? From there, it just cascaded, right? We saw a little bit of a bounce, but even if you're just tracking like, your fair value gaps, right? You got one here, and we never trade back up to it. It's just a straight momentum move to the downside. There's no fair value gaps that we trade back up to re-enter there, right? So there's definitely, if you're just trying to jump into a short, kind of missed a lot of the move unless you were just strictly trading it off of jumping into a momentum move, right? And even then, if you're just looking at technicals, you got even your retail indicators, right? You're oversold right out of the gate in the candle. You go deeper oversold. That would have been an opportunity to try to take a long entry just knowing it was oversold. Even here in the 937 candle, as we take a new low, right? That gives us some RSI divergence. That could have been another indication to try to go long. And we just continue to fade from there, right? And you can see RSI is setting up just massive divergence throughout the entire day. You guys can't see that on the chart, but if you were to look at the chart of the 1 minute RSI, there's just massive divergence as it continues to set new lows, just wiping out liquidity. And we never even go anywhere close to the oversold reading from the early morning. So it was just a complete sell-off. And then basically what happens in these moves is you start to run out liquidity. You start to hit sell stops. You start to hit stop loss orders, right? And you start to hit all these kind of these also limit buys, of people wanting to get in. And then they get in and it continues to fade and then they get out, right? So just no real clear smart money concepts, indicators of taking a short position in there. You would have been just, again, riding the momentum. At the bottom after lunch, we appear to carve out a clear bottom. We set a low, we run the stops on the low, we retest the low, right? And then we start to see some bullish activity that's a little more promising. We get a change of character, we get a fair value gap, but even there, the bounce up does not give us any kind of good entries. It does not give us any clear smart money entries, right? We do see, again, we see a really tiny fair value gap here that we trade back into. That could have been good for a little bit of a run. If you were to have got that, it would have been a real sniper entry. It's an order block with a fair value gap, trading back into the fair value gap and the order block, right? And so that's going to be a super low risk entry with your stop right below the low. And you could have got a nice scalp there into the end of the trading session. I didn't take any of these trades, and then you can see ultimately we end up fading it out in after hours. So really going to be interested to see what happens tomorrow. A lot of manipulation going on in this stock specifically. If you look at the rest of the market held up pretty well compared to Tesla. And so, we'll see what happens over the course of the next week. It will be interesting. A lot of again, news drivers, non-farm payroll, ADP, jobless claims, Fed testimony, Fed speakers, all kinds of stuff coming up over the next 3-4 days. So it'll be a wild one. Get ready to buckle up. Hopefully, again, if some of you guys are long, we're going to be looking for exit strategies. For those of you looking to go short, we are looking for bounces back up towards, towards where we just came from, and then looking for, smart money concepts short entries, because there is potential for this to go deeper. As we can see here, even on the 1 minute time frame, we have an inverted fair value gap that could, that could be a liquidity target as we continue to fade even lower. So good luck on your trading. Hopefully this has been insightful for you guys. Don't forget to smash a like, subscribe, share with all your friends, and we'll see you guys on the next one.